Hey everybody, I am Surbhi and you are watching Key Differences. In this video, I am going to explain you the differences between bookkeeping and accounting. So friends, without further ado, let's get started. Bookkeeping. The word bookkeeping is a combination of two words, that is book and keeping, which means proper and systematic maintenance of books of accounts. Hence, bookkeeping is a routine and clerical process of accurately recording all monetary transactions in the books of accounts in a chronological order. It is a part of accounting and it is governed by the principle of double entry system. Bookkeeping starts with the identification of business transactions. These transactions must be supported by the documents and must be financial in nature. On the identification of these transactions, the bookkeeper records them in the proper books of accounts. Hence, it helps in maintaining a complete record of the business transactions in an orderly manner. So, bookkeeping involves identification of financial transactions and events, measurement of transactions in terms of money, journalizing the transactions, posting these transactions into respective ledger accounts, casting the total of ledger accounts, and lastly, finding the balances. Therefore, bookkeeping is all about systematic recording of transactions in the journal and then posting these transactions into ledger. Moving on to accounting. Accounting comprises a series of activities involving collecting, recording and classifying, summarizing, analyzing, interpreting and communicating information to the users. In a nutshell, we could say that accounting is bookkeeping plus summarizing, analyzing and interpreting business transactions of financial nature. It is responsible for displaying the true position of the company. That is why it is called as language of business, which aims to communicate the relevant and material information about the business to the internal and external group of users by creating reports and financial statements. With the help of this information, the users can get an idea of financial position of the company. Along with that, they will also get to know about its assets, liabilities and net worth. Hence, the main task of the accountant is to transform the financial data into information which can be used to meet the needs of the users and they can make rational decisions on the basis of this information. Further, accounting transactions are both money transactions and money worth transactions. Now, you guys must be wondering, what is money worth transactions? So friends, credit transactions are money worth transactions. Hence, accounting transactions are not necessarily cash transactions. Further, apart from recording and posting the transactions, accounting also involves preparation of trial balance, passing adjustment entries for rectification, preparation of income statement and balance sheet. Further, for a better understanding of accounting, let us take a look at accounting process. Accounting process is the sequence of steps that begins with the recording of financial transactions and ends with the preparation of final accounts, that is financial statements for the financial period. The process goes like this. It starts with journalizing. In this step, the balances of account from the opening balance sheet and the day-to-day financial transactions are recorded in journal. The next step is ledger posting. Once the transactions are recorded in journal, they are transferred to the respective account opened in the ledger. This step is also called as classification of transactions. Thereafter comes balancing. It is the process of ascertaining the balance between the total of debit side amount column and the total of credit side amount column of the ledger account. In the end, the specific period accounts are balanced. The main function of balancing is to check the arithmetical accuracy of the ledger accounts which the bookkeeper prepares. After that, we prepare trial balance. It is like a list which shows the balance of each and every ledger account. This list is what we call trial balance. Further, the total of debit column must be equal to the total of credit column. After that, to find out the profit or loss for the period, we prepare income statement. It indicates the outcome and profitability of the business. In the last step, we prepare balance sheet. It indicates the financial position of the enterprise at the end of the period. Here, it is to be noted that the closing balance sheet acts as the opening balance sheet for the next period. Moving on to the difference between bookkeeping and accounting. Meaning, bookkeeping is the process of recording the financial transactions and events of the company into organized accounts on a daily basis. On the other hand, accounting is the process of identifying, measuring, processing, and sharing financial information about the businesses and corporations. Next, scope of area. The primary function of bookkeeping is to identify the financial transactions, measure them, and then record these transactions in a systematic manner in the books of accounts through journal. Conversely, accounting includes summarizing the classified transaction, which involves preparation of trial balance and final accounts. Thereafter, analyzing and interpreting the results thereof. Objective. The objective of bookkeeping is to systematically record and maintain financial data or events which are measurable in terms of money. Conversely, the objective of accounting is ascertaining the financial performance, analyzing and interpreting the financial information so that it can fulfill the needs of the users. While the work of bookkeeping is performed by clerks having basic knowledge of accounting because it is performed regularly and chronologically. Hence, the work is performed by junior staff. On the other hand, the work of accounting is performed by a skilled person having expertise in accounting because it requires analytical skills and the job should be performed in a systematic manner. Hence, the work is performed by senior staff. Next, stage. Bookkeeping is the primary stage in the process of preparation of financial statements. On the other hand, accounting is the second stage, that is, accounting begins where the bookkeeping ends. Use of skill. Bookkeeping is a mechanical regular job and so it does not require any special skill. As against, accounting requires analytical skills to interpret the results shown in the financial statements. Next, result of business. Bookkeeping does not depict the operating results of business, whereas accounting depicts the operating results of business. So friends, this brings me to the end of this lesson. I hope the concept of the difference between bookkeeping and accounting is clear to you now. However, if you want to study the topic further in detail, you can visit our official website, that is keydifferences.com. Here, you can find a detailed comparison of bookkeeping and accounting along with their definitions. Links are also provided in the description box below. I hope you liked this video, and if you did, please do give it a thumbs up and share it with other people. Also, if you are new to this channel and wanna get more such useful videos, consider subscribing the channel and also hit the notification bell next to the subscribe button so that you are notified every time whenever a new video is uploaded on this channel. And if you have any queries or feedback for me, feel free to leave in the comment section below. Until next time, this is me Surbhi signing off.